Welcome back to Leaders Live. I'm Charlie Stevens, your host. Today I'm very excited. We're in Madison Square Park, right overlooking the Flatiron District. Key takeaways from last week's episode. It was a great episode. Go back and watch it. Talked with AJ Vaynerchuk, co-founder of Vayner Sports and Vayner Media. Really like the way he operates with his clients. He understands what they want, what their passion is, and what they're trying to achieve. And from that, he creates these opportunities with partners and presents it to them. They take it or not. Either way, it's a new income stream possibly, or a partnership, but it's a great way to live. I think we're trying to do that today. We're going to go meet with Luan Cox, founder and CEO and president of FinMkt, here overlooking Madison Square Park at 222 5th Avenue. Let's go. Do you want to hear about how FinTech has started, where it is, and where it's going? It's going to be the episode for you. We're here with founder, CEO of FinMkt, Luan Cox. Welcome to the show.
Thank you, Charlie.
Yes,
nice
very
to be
excited.
Here.
We're going to start the minute 30 countdown, get the squad load up so that we get some more people on.
Great.
Know?
Come on.
Come on with it. I wonder how the shot looks. I'm gonna peek over her shoulder.
Oh yeah, we'll be able to see.
Yeah. What a nice day though. It's finally turned out. Like this, the weather's turned out.
This is better than yesterday. Yesterday was a little.
Yeah. Muggy.
Yeah. And with the pollen, this feels actually like spring.
Right.
You go anywhere for a Memorial Day?
I don't know. Babysitting 3 kids. I don't think I'm allowed to go anywhere.
Could you have a station wagon now?
Oh, we got a minivan. Chrysler Pacifica.
You have to, right?
It's great.
I know. Whenever I like travel and like with my mom and the kids, and we always rent a minivan. I'm like, this is so nice.
My wife's like, no way I'm going back.
Yeah.
The minivan it is. I'm like, you know
so
what?
Good.
I'm not against it.
You have animals?
No.
Well, if you ever do, dog fits nicely in there.
Yeah. 30 seconds.
You're not an animal person, Charlie?
I grew up with a lot of animals. My wife is a clean freak. She likes to clean, so when we get there.
So no dog
we have
there.
3 kids right now. Three
little animals.
Yeah. They're going to be big animals soon.
2 boys, 2 girls?
3 boys.
Oh, that's right.
Yeah. Welcome back to Leaders Live. I'm Charlie Stevens, your host. Thanks for tuning in. Here with Luan Cox. We got a lot of great stuff to talk about today. FinTech related, FinMkt, great company. Before we get to that little intro, why we're doing to the show, right?
Yes.
People are saying, why are you doing the show? You're a real estate guy. You help people find very nice office space. Like this space right here, very nice with a lot of good luck too.
5th Avenue,
yeah,
yes.
It's just a humble brag, but no. Yes, I help people find nice office space.
With good luck.
Yes, with very good luck. But overlooking Madison Square Park. But the reason why we're doing this show is we want to help the community, the LinkedIn community, understand how business leaders like yourself operate. And once we understand that, we can connect you with other people and build your business up together and our relationship together as well.
Yes.
Too, through content, through live streaming and all this other good stuff.
Mm-hmm. Love it.
All right. So we will have a live Q&A portion of the show. So get your questions really for Luan ready. You can submit them now, but we'll get to them about halfway through the show, and we'll do the live Q&A portion. Mike's on the microphone. So Mike's good luck too on the microphone too. So a little bit background about Luan. Luan is a entrepreneur, founder, a leader in the FinTech game, CEO, president, founder of FinMkt. You are an advisor on Springboard Enterprises, which we'll get to, a mentor at Techstars. You've been through 3 different companies, helping them build the company, grow them, sell them. So a lot of experience, a lot of good stuff.
Yes.
But before we get to all of that and the business itself, bring me back to the 90s, okay? Bring me back to the 90s, bring me back to Mountain View, Silicon Alley. where this kind of
Valley.
This is
alley.
This is Silicon Alley. From the valley to the alley.
Yes.
I like that. I like that. We should have started off like that, you know. Yeah. So let's talk about that. I mean, you were a part of a founding group.
Yes.
Of FinTech.
Yes.
Exciting. What was that like? Tell us.
Yeah, so this is the mid 90s, and we were young kids in Mountain View doing something very controversial, which was bringing stock quotes onto this new thing called the internet. And everyone thought we were absolutely insane because at that time, no way could a normal person understand a stock quote without calling their broker. But it also cost the brokerage firm $150 to give you the price of IBM. So we decided that we could take feeds directly from the exchanges, put them on the internet, and bring on other sort of Wall Street quality information to the masses. And we're sort of accused of arming the United States citizens with the same tools that a broker had at the time. And then companies like E-Trade and Schwab, who were pioneering the self-directed investing world at the time, called us up and said, called me up because I ran business development and said, hey, we don't want to aggregate all these data feeds. We don't want to build these front-end applications, charts, portfolio, et cetera. Could we just give you our logo and you could make it look like our website and you could host it for us and we'll pay you a bunch of money.
Right.
And back in the 90s, if you were an internet company, first of all, making any money, you were winning. But if you had a model outside of subscriptions and advertising, you were really winning. So, and the model we had, thanks to Schwab and E-Trade, was this new model of licensing. So we sort of invented web-based financial content licensing in a cloud before all those words were really used.
Yeah.
And I just went on to build 3 other companies in that same vein. So if you've gotten a stock quote on the internet, it probably came from a company that I helped build.
It's amazing. So
Yes.
you helped build those companies. You created them, help create them, help build them, and then also help exit from them too.
Yes.
So what I'm thinking and what I'm curious of, and I would think maybe entrepreneurs or anybody listening, business founders would be interested. What are some of the overlapping characteristics of those companies that made them successful and the cycle that you went through?
Sure. So I think one important distinction I should make is the difference between a B2C technology company and a B2B to C technology company, right?
Okay.
So my experience is all B2B to C, meaning building things that could be licensed and utilized by large companies. And in our case, always these large companies were banks or brokerage firms. And when you have an installed base or when you have the ability to license stuff to these large, slow-moving institutions, it's highly valuable because one, the model itself is a recurring revenue model, but two, the sales cycle is very long. So they're not getting rid of you anytime soon and no one's replacing you anytime soon,
right.
Which props up the value of your company.
All valuable stuff, right?
Yes.
I think so.
Yes.
Obviously proved well.
Absolutely, and it's a very incestuous world, financial technology, especially in the data world. Companies get bought and sold and traded across Thomson Reuters might buy a company and then sell it to Bloomberg, and then Bloomberg might sell it to Dow Jones and then back again. So it was interesting because prior to starting this company, I was at Interactive Data, which is the 3rd largest data provider in the world, building their web solutions group in North America and South America. So a startup within a large publicly traded company, and I had the opportunity to buy back all of the companies that I had sold in my past.
It's got to be a good feeling, yeah.
Yeah, when I'm seeing my 29-year-old signature on contracts and then buying that company back, when I'm 32.
Right.
Cool.
Right,
Yes.
and also throughout that, you found your co-founder of FinMkt
at Interactive Data.
At Interactive Data. So let's naturally go into FinMkt. What's going on here?
Yep.
Online lending platform. You have a gateway. I guess it kind of started in 2013, right, with Crowdnetic, but then it evolved in 2016 to this online lending platform. But give the viewers, everybody, kind of a gist of what the business is.
The life. Sure. So I met my work husband, Sri Gotetti, at Interactive Data. He's our chief technology officer. And he and I built a very successful business there. And then when Interactive Data sold into private equity, we decided maybe not so much fun to stay around here. And at the time, we were noticing this sort of social finance movement. Really, it was started by Kickstarter of all companies, right? Not a fintech company at all, but kind of a fintech company.
Crowdfunding.
Yeah, exactly. So I saw this thing called Kickstarter. I grabbed Sri, and I'm like, I don't know what this is, but we got to go do something there, because this is, in my mind, we were seeing sort of what was happening in the 90s, which was things that were happening offline and money involved coming online. And then when so we quit our jobs, started what was our previous name, Crowdnetic, and our goal was to dig in, understand the space at first, but while we were doing that, Barack Obama signed into law the Jobs Act, which made it legal for companies to use crowdfunding to raise equity in their companies, which doesn't sound like a big deal, but actually it is, because prior to signing that, if you were a company, you weren't allowed to advertise that you were raising money. You could only speak to accredited investors, people who are making, the 1%. So especially for women and minorities who may not have those relationships, the Jobs Act, being able to tweet out that you're raising money, being able to go on angel lists and post it, right? Post your offering on Facebook. This was pretty big deal.
Big news.
So we decided that, wow, this is a new asset class, private securities, now coming onto social media, the internet, and Thomson Reuters, Bloomberg. Nobody's paying attention. Our ex-employer, but these are securities, and no one's tracking them. So we decided to build a real-time market data platform to track this new asset class that was coming online. And at the same time, there was another asset class that had come online, which is online lending, peer-to-peer lending, Lending Club Prosper. And to us, when we saw these two, being data people, financial market data people, we saw private securities being really just stocks or equity, and then peer-to-peer lending or online lending being retail fixed income data.
Right.
So we built this Ferrari of a platform, because Shree's background is in building, exchange type platform, like where you could trade securities, that could support options and futures. So probably a little bit of overkill, but on the first day that we launched in October of 2013, we had 3,000 companies on the platform.
Wow.
And we built
It's a good start.
Yeah, we built a proprietary data taxonomy around sectors and industries, so you could actually sort in a modern way. We created our own version of a QSIP, which for non-tech people is how every security is identified, as a number. And then we built an awesome web platform called CrowdWatch. We struck a partnership with CNBC to create daily indexes tracking crowdfunding. We supplied our data to Thomson Reuters and their Icon desktop Bloomberg competitive product.
Big names, yes.
Yes, all the right partnerships, everything right, but we just couldn't get anybody to pay us.
Right, too early.
Too early and not enough, really, is the truth. They wanted us to be more of a private company type, like a PitchBook or a CB Insights, which are awesome companies, but not what we wanted to do. We wanted to eventually be a trading platform for these private securities and fixed income instruments. So we had to make a decision. We had this awesome technology. We could look ourselves in the mirror and say, we did all the right things. We had all the help we could get from the right players. What are we going to do now, right? And so we decided, all right, where is the social finance industry hurting the most, and what part of it will continue to grow and never go away? And we set our sights clearly on the online lending space.
Right.
And at that time, companies like just at that time, now it's grown, but Lending Club, Prosper, Avant, Best Egg, and we decided we would take our platform and help them with one of their biggest problems, which is customer acquisition. So these companies had figured out how to streamline the online lending underwriting process, so being able to approve you in seconds and get you your money in a day. But when you're not actually touching people, there's no branch, how do you market to them? And the way they were marketing to them was really two ways. Direct mail, which is the most expensive way to market, and they still do that. And then business development. So they would go and try to strike affiliate partnerships with websites that had traffic that wanted a lending solution.
Right.
So two big problems. Direct mail is really expensive, and one lender who operates in one part of the credit spectrum going out and trying to go to a large e-commerce site saying, hey, we'll provide loans to your customers, that site's going to tell you, and they did tell them that, why would we choose you? Because you're only going to approve people who have really great credit. What about the 90% of the other people? So we decided, wow, if given a choice, wouldn't that e-commerce site prefer to work with a multi-lender platform where every lender up and down the credit spectrum were integrated with one touch point, us. So we launched our gateway platform, Lending Gateway, about 2 years ago, and it's grown 300% year over year. We had actually a couple profitable months last year before we invested in more of our team members, and it's been hugely successful. We're processing $500 million a month in consumer loan application volume, and now about to launch our next version of Gateway. Right,
that's exciting.
Yes.
So I mean, the way I look at it, you have the lenders, the group of lenders, and then you have the websites that you're white labeling this for. Can you kind of explain some of the websites that maybe somebody has or a business owner that could use this product and it would help them grow their business or their client base, right?
Sure. So it's our typical, we call a referral partner, is a company that has good bit of traffic, does most of their business online, right? So an example, it would be one of our favorite little clients called SpaDepot.com. Spa Depot does one thing, sells jacuzzis online. And before meeting us, they had a partnership with one lender. Which was so-so, and then now have a partnership with all of them. Right. So we also have relationships with companies like HFS Financial, which provides pool loans. And before meeting us, HFS would go and manually go to each lender by themselves. Now they can go to one place, us, and get the best offers for their customers. But yeah, that is what we are on the current version of Gateway looking for. In our new version of Gateway, we are forging partnerships with medium and large size banks. So the industry has evolved. So when I talked about earlier, where can we invest our future? Where do we pivot into a space that's not going anywhere? So where they call them peer-to-peer marketplace lenders were very pioneering in how they figured out how to decision quickly. The reality is that banks who have a lower cost of capital, the only thing keeping them from competing with a lending club is technology. That's it. Right. And that's a matter only time.
They're focusing on finance, and you have the technology to back it. They're not technology people, right?
Exactly. And so banks have started to come online to compete. So Goldman Sachs launched Marcus. Discover has a product as well. Several other large banks are coming online, and the other sort of paradigm shift in the FinTech world that's happened is, it used to be when you would go and sell to a bank, which I've been doing my whole life, and I have all the gray hairs to show for it. The business people would be like, yes, let's get this done, let's get this done. And the tech people would be like, we can build it, we can do this. You don't need to work with that company. So it was always this buy versus build analysis that you'd have to wait for, and would usually not come down on your side, and sometimes would. Now, there is no argument. The largest banks in the world are just throwing their hands up and saying, we are outsourcing. We know we've already lost. Tech people, be quiet. And so it's a great time to be in FinTech.
Yeah, absolutely. It kind of reminds me, we spoke before, you were on the Culture podcast, people could check that out too.
Yes.
But we talked about tips if you're going into FinTech and you're a founder, right?
Yes.
And you mentioned that if you're a finance or background, you're going to need that coder or technology founder to complement you, and it kind of seems the same way here with businesses.
Oh yeah, so that's my advice. No matter what type of startup, tech startup anyone wants to put together, is you have to have a tech co-founder.
Yeah.
And in FinTech, it's especially true because a CTO or a tech co-founder or co-founders for a financial technology company can't just be any type of technology person. They have to understand finance as well.
Right.
So finding that is really hard, and I think it's the difference between really success and failure. I mean, I feel so fortunate to have Shri and our team.
Yep.
Yeah, I mean, we have an amazing team, but it's because Shri understands both finance and technology, and allows me to go and just sell, bring on partners.
Yeah, work off each other's strengths.
Yes.
Let's work into the collaborations and network part of this. You mentioned some of the big names you're working with, right? So we put this together so people can understand how to properly network and find those partners.
Yes.
You mentioned a lot of big names, right? So how did you kind of work your way in there, the Thomson Reuters and all those others? Like, how did you kind of build those relationships and then, connect them?
Yeah, sure. I mean, LinkedIn is very valuable.
Not bad.
For sure. I mean, that's the only way we can actually connect with people we don't know.
Yeah.
And so, big fan. I have the benefit of being in industry for a very long time. I think I've also have pretty good reputation of treating people fairly and helping people wherever I can. So it comes back. I'm big on karma.
You're nice.
And I'm also humble. So I know what I don't know.
Yeah.
So with the Thomson Reuters and the CNBCs, those were natural relationships for me because I'd worked with them or people around them in the past. As we move into our new world of Gateway 2.0 and creating more secret sauce in the platform, which is designed to help banks become digital, then I don't want to say we're starting from the beginning, but we don't have these relationships because in a lot of cases these are brand new groups in banks.
Yeah.
So what we are looking for now, we've been fortunate enough to be engaged with a lot of very large banks, but there's a lot of banks we'd love to still talk to, but people within their innovation group or online lending. So I guess any banks out there who are interested in getting into digital lending and specifically providing personal loans to homeowners looking for home improvement loans, that is really going to be our focus. And we've got a very good stable of very large partners that are going to bring volume. So for all you innovation people at banks, call us. And then and then for again on the home improvement vein, any providers of home improvement services online who want to have access to loan financing solutions for your customers, call us or LinkedIn with me, and
absolutely,
we'd love to talk to you.
The partnership, I guess, side of it too. You're part of Springboard Enterprises, which is
huge fan. Yes, we wouldn't be here without Springboard.
The most elite group of women-led companies.
Yes.
So let's talk about that. I know that Kay and
Amy
are
Millman,
big supporters of yours.
Yes.
Probably watching right now. How you doing? Okay. But I mean, talk about the value of that type of group, right?
Absolutely. I mean, it's so relevant now, especially as we see women really, leaning in, if you will, and taking their place in the world. But yes, Springboard, if you haven't heard of Springboard, please go to sb.co or LinkedIn with them. But was founded by Kay Koplovitz and Amy Millman. Kay is a just rock star, a mentor of mine. But 20 years ago now, I can't believe it's been that long, but she was noticing that there weren't that many women that were getting venture capital. And she, being the founder of Sci-Fi Channel, USA Network, she invented the concept of relicensing old content. Board of directors of Oracle, Computer Associates, pulled out all of her favors.
Geosynchronous orbiting satellites.
Yes.
That's all I remember from her. She's putting together satellites for a network. I mean,
she's
mind-blowing
unrelenting.
stuff.
Yes.
So when you have a leader like that, I mean, you should check out Springboard Enterprises.
Absolutely, and she called on all of her male counterparts and VC contacts and said, hey, I'm going to bring you the best of the best women-led companies, and you're going to look at them, please. And yes, so Springboard is 19 years strong. Companies like iRobot, which is the Roomba, the thing, are alum. Zipcar, Robin Chase is an alum. And FinMkt had the honor of being in the 2013 class. So yes, we wouldn't be here without Springboard. And they are the reason why we were able to work with Thomson Reuters, and CNBC. So it's that people helping people that also is so critical in the startup world.
Right.
And
that's a network. That's a strong network. Strong network.
Absolutely.
As we get into the Q&A portion, hopefully people are submitting their questions right now. My question for you was, as a mentor at Techstars, as an advisor at Springboard, what is a piece of advice that you try to give to these young entrepreneurs who are growing their businesses?
Yes. Values. I am big on values, and we talked about that on the podcast. About that figure out what your values are before you start anything, because you're gonna fail many times, and if you want people to stay with you, they're gonna stay with you or invest in you. Yeah. They're not investing in your idea or your product. People invest in people, and people work with and follow leaders that are not because of a product idea. So. Figure out your values and get them, heavily ingrained in yourself and outside. So for us at FinMkt, our values are loyalty, trust, honesty, integrity, passion, and teamwork. Very simple, and that's not just been at FinMkt, but at every company prior. Yeah. And I would make sure that you figure out what yours are. Partner only with people that have those same values. Yeah. And you'll be fine. And stay humble. Right.
Mike has the questions, and he's going to send us over some questions, right? I think, Luan, your mic came off a little bit right there. It's live. It's cool. We'll fix that.
All right. So we've got a few questions in here that I think are really good. I think one question I want to pick here, this is from Devoini Wilmont, and she asks, did you use primary or secondary research to find out that online lending industry was in pain with customer acquisition? And how did you discover that pain point?
That's a great question. It was, certainly very well documented in the media in terms of how these companies were acquiring or needing to acquire customers, but not well enough to be able to figure out should you go and help that, because nobody wants to admit pain. Certainly not, companies that are pioneering a new industry. But because we were already in the social finance community and had relationships with a lot of these early lenders, we knew from them that they had this issue. And it's a financial issue. It's a math problem, right? It costs X dollars to send a piece of direct mail. Conversion is Y. This is the profitability on a direct mail acquired customer. And if you could help them there, that would be a win. And then in talking with, in terms of the multi-lender business development pain problem, that was a no-brainer too, because we were able to talk to the same companies that their biz dev teams would talk to, and the companies would tell us, we didn't work with XYZ lender because it was only one lender. So yeah, great, thanks. Glad you're here, because I do get to work with them now and everybody else. So that answers your question.
Solid questions.
All right, yeah, thanks so much for that. For other women leaning in and taking on more leadership roles within the technology space, what advice would you give them?
Prepare yourself, educate yourself. We have to, whether you want to admit it or not, we have to be better, we have to be smarter, we have to be stronger. And if you think that you can do as much as a man and be as successful as more, then you're delusional. So I'm here to tell you right now, if you want to kill it, you've got to give it your all and really dig deep in terms of being better.
Great, thank you so much for that. All right, I think we got one more question here.
One more
And
question.
don't, and I will also add one more thing. Do not underestimate the perception that male counterparts might have of you. It is very real, and it's not always positive. So you've got to present yourself in a way that that's respectful and demands respect.
All right, last question. Unless we got more, man. I know we got a tight window here.
Yes.
A lot of questions. What do we got, Mike?
With your experience in FinTech and your track record with the previous successes that you've had, what are some things that you've learned in those past experiences that you have implemented into your newest company, FinMkt?
I mean, I don't know that it's that I've learned and then implemented. It's something that I've always tried to continue and focus on, which is don't burn any bridges. Always try to do the right thing. And I should say, I don't even like the word try. Just do the right thing. Always. Not the easy thing, which I also have on my wall. Because it will always come back. I mean, our Series A investors, for example, in our company were investors in my company 15 years ago. Our Series B investors, while I didn't know them personally, used products that we built 15 years ago. And my point is that reputation, doing right by others, being an upstanding citizen, and then also really good at what you do, is critical. So here at FinMkt, I talked about the values, but treating people with respect, treating our clients with respect, white glove service, that is more important than money, because money will come as long as you do the right thing. Right?
I like that. Reputation and respect. I like that a lot.
Yes.
I like that. As we leave off, a couple things. Words solidify, maybe a personal ethos, mantra, whatever it may be. So you could be, maybe inspire some people for this Tuesday morning.
I would say be good to yourself, be kind to yourself, give yourself every chance to be successful. Only surround yourself with positive people and do what you love, and not to be cliche, because if you do what you love, you never have to work a day in your life. And I can say that because I'm half Asian. And I think the only other thing is, I would love to hear and please LinkedIn with me, but I'm always interested in trying to figure out how we can empower more women in technology, and specifically financial technology, since it's such a big part of society and one of the fastest growing technology sectors, and not enough women involved. So I would love to...
So for the question, you want to leave that off as a question?
how do we inspire and motivate more young women to enter the FinTech space? Because there's an imbalance, right? The FinTech companies that are being started are largely men, but the demographic is still women and men in terms of who need these services. So we've got to balance that out a little bit for the greater good.
Yeah, absolutely. I like that. I think this was a great episode. I think that's all we got. We're wrapping it up.
Thanks to you.
Yeah.
Great host.
Thanks for coming on. Unbelievable.
Anytime.
We're going to wrap it up. We're going to play April's music.
Make our own.
Make our own. Neighborhood group.
And
Yeah.